Good morning, ladies and gentlemen. Welcome to joining us for this latest webinar today, which asks the question as to how will hotel operating models evolve and change between now and 2030. This series of webinars is brought to you by a partnership between HVS, Bird Bird, and the Leader's Journey. We've always sought to ask the questions which are truly relevant for a moment in time. And I think the discussion about how services are evolving and how hotels are evolving is particularly relevant at this moment. The hotel industry has been changing, particularly with all of it kind of prompted as a catalyst by all the crises over the last 6 years, which have heightened the pressures on operating models and on margins, which in turn pose a whole range of new questions around the use of AI, around the need to attract the best talent all across the world, around service levels, and around how the model is changing. Many traditional boundaries are eroding and changes coming in all kinds of new ways. It was interesting to listen to a debate on the weekend about the economy, when it was noticed that all the debates really don't mention the fourth industrial great revolution, whether it's the right term or not. It is so often ignored. Of course, it was noted that today's fast-paced shift to smart technology is impacting in ways that we seem to underestimate and maybe still struggle to understand. And I think today's webinar will seek to answer this question. It is argued that hotels have been slow to adopt to modern innovation due to high upfront costs, kind of fragmented and legacy computer systems, and a fear of losing the human touch in customer service. Is this true? Do you agree? Historians note that the industry has moved from being the very forefront of innovation back 100 years ago to now lagging way behind. In the old days, the hotel industry was the first with hot and cold running water, in-room phones, electric lighting, in-room entertainment, elevators. But now it is all about, are we going to invest in AI or not? So I think today's presentations will be particularly give us an interesting perspective. Now, of course, the past innovation was physical innovation, which is a different type, while today's innovation and smart technology actually can impact on the 24/7 running of a hotel. So it is different, but it could also be just equally and probably more far-reaching. To be fair, the new innovation is asking us new questions and crosses new lines in relation to data management. What can be trusted? Who owns what? What is the risk? Hotels are responsible for a 24-hour service and guest privacy, whilst also evolving data systems, which has its own cost implications. So where do our experts of today view future development? How may all this impact on operating models and on service and on margin? These conversations are taking place across all industries, not just hospitality. It is challenging traditional thinking. In a recent interview, the former UK Prime Minister Sir John Major recently commented that politicians no longer work off the traditional principle that the job first is to ensure that we leave the world better for the next generation than we inherited. The simple reason for that is the problems being inherited are too complex to solve. And what this means is that we're getting to short-term thinking. The same is being actually argued about business leaders. But is this true? Are we just trying to find our way through these various crises that we face and not focus on the long term? One of the dangers of this, of course, it creates a disconnect between leadership, business leadership, and staff, people, and the customer. A recent government report notes that the youth disengagement today is the highest it's ever been, and averaging at 1 in 8 people. Research also tells us that for the very first time, the young feel more lonely than the old, that the young struggle to see genuine opportunity to improve their lives, to possess dreams and to find opportunity that give them aspiration for the future. It is they're growing up in a very different world to the one that we enjoyed and prospered in. Research also tells us that education is no longer preparing the young for the workplace, and that the system is simply placing too much pressure on too many young people. Debt is increasing to record levels, And of course, this increases a fear of failure. Failure has cost implications, and they already are carrying more debt than previous generations. So how do we make this a better place for the young? How do we attract the young in to be aspirational? If they struggle to see opportunity and upward social mobility, surely we're actually harming ourselves in the long term. So can some of the changes we're looking at impact all of this? Of course, the positive counter-argument to all this is what we're witnessing in the World Cup, where the real story has been how the fans have come together and created their own stories. The Scots winning over the Hearts of Boston, the Norwegians with their famous rowing celebrations, and the Brazilian street parties, amongst others. And good luck tonight to England against Argentina. It should be a great match for the semi-finals. People are investing in real experiences today. It's bringing people together. People are looking for communities. This is just as innovative as what's going on in smart technology. So how will this impact on the industry as well? This is a very different environment to what we had 20 years ago, and are we adapting? Much is changing, and the question now is how will the industry change as well? I hope you enjoyed today. We've got some fantastic experts who will guide us through. Please feel free to ask questions as we go. There's a Q&A button. Please ask on that, and we'll try to make sure that we get back to everyone and answer their questions. But before we start, can we ask some poll questions? Izzy, can I ask you to bring up the poll questions, please? Question 1, where do you see the mid-market heading over the next 5 years? It's one of the great debates, isn't it? And there's 4 answers there for you. Question 2, which areas of hotel operations will AI and digital technology transform most by 2030? Again, there's 5 choices there for you. Question 3, how important will F&B be to hotel profitability and guest experience by 2030? And question 4, what do you expect the overall impact of new operating models to be on hotel profitability and valuation? Izzy, do you have the results? So question 1, the 57% say the mid-market be squeezed further between premium and limited service. 30% say consolidate. 13% successfully reinvent itself. Very interesting. Question 2, 69% say revenue management and pricing being the key bit. 34% guest personalization. 45% back of house. Yeah, I think that should lead to some interesting perspectives. Question 3, how important will F&B be? The experience differentiator. Yeah, I think that's true. And more has been asked of that. In question 4, 64% mixed winners and losers depending on the segment. Okay, very interesting. I think we're due to have some very good debates to follow. So thank you very much. I look forward to seeing your Q&As as we go. Can I first then introduce Ronen Nissenbaum, the Chief CEO of Western Europe and US Development for Leonardo Hotels, who's going to come and talk about how we're operating models evolve and change. Ronen, very welcome. I'll pass over to you.
Good morning, everybody. I'll just quickly share my screen, and there we go. Let me know if you have it. Everybody see it? Or somebody see it?
Yes, if you want to pop it onto full screen, Ronen.
Yes, you're right. Thank you for that. Good. Good morning, everybody. Thank you. And I think based on the poll questions and answers, I'm probably preaching to the converted in some of the responses that I saw there with everybody there. So very quickly to get into it, I think I was mentioning to Russell that this is a kind of a half an hour presentation. I'm going to try to squeeze into 10 to 15 minutes. So I'll be speaking very quickly, but happy to answer any questions afterwards. How are the operating models evolve? If I go to where we are today, from a real estate to brand, the move to asset light, I think that the question has been asked multiple times, certainly of me in panels. Is the asset heavy? Is it asset light? Which one is better? Which one moves forward? And I'll take the other side right now of saying that there's a very strong correlation between a company that has a significant franchise share, i.e., most of their hotels are franchise, and their profitability percentage. So they're very profitable. They're higher GOP or NOP net profit percentages when you franchise. Very simple. These are fee structures. The fees come down, you take off the head office and the distribution cost, and you're left with a GOP that's typically very high in the 50s and an EBITDA that's probably in the 40s, as opposed to when you own the assets and you have everything. The percentages are much lower, but the dollar amount or the pound or the euro amount are greater, obviously, when you own the properties and the economics. So percentage wise, it's better. Dollar wise, I'm not sure. The second box there, the 200, just shows that, even though European market in total revenue of 200 billion, it's becoming scarcer to develop because of the cost of land, the cost of new build. It's becoming a little bit more challenging. And we've seen that in our company, that more and more developers are having challenges in making the numbers stack up, that actually build it and then lease it, or build it and then sell it. The build costs are become so much higher, than it becomes difficult. And you see it as well from the additional supply in the different markets all over the world, at a record low of less than between 1% or around the 1% increase in supply, which is obviously very helpful for the existing hotels. And the last point is, everybody's focused, whether it's for AI purposes or otherwise, on asset management and making sure that you're managing the property the best way you can, that you're using sustainability and you're using AI and you're reducing your cost. So 100% of the people that are being asked what is important are saying you need to manage your asset better. You've got to focus on that. The answers before are not universal. Luxury groups keep ownership, and when I mean about ownership, obviously they're not asset heavy, whether you're talking about Ritz-Carlton or Four Seasons, but they keep the management. They don't franchise their brands in order to maintain basically the standards that they have there. And I think that we found it a lot easier from the size of properties that we were. And again, about a few years ago, 4 years ago, we were 200 hotels. And today we're at 320 hotels. We found it a lot quicker for us to develop and move forward as an asset heavy and purchasing properties. That was the way we could scale. And again, I think all of the big companies, whether it's IHG or Hilton or Marriott, all started asset heavy. They all were in that business, buying hotels and owning hotels. And when they reached scale, they were able then to manage and franchise hotels for owners. So it's an evolution of where the companies have gotten to, but it takes time and it takes scale to be able to sell a franchise on and become more asset light as time goes by. What's ahead in terms of the future? If you look at it, operating model by 2030. The first point I'd make is polarization. We see it in the K-shaped economy between premium and budget. They're pulling apart, and what's left is the middle. And I think there was one poll question on that. The new models of membership, subscription brand, and I'll go into each one of these. So I'm going to go quickly here. AI and personalization, a cost line to a revenue, becoming a revenue engine, sustainability from compliance costs to license to operate, just like the internet was, and experience F&B becomes more important. Again, one of the poll questions. And the brand, how powerful is the brand as it accelerates through? And I'll go through that very quickly. Polarization, as we said, the premium and lifestyle, the experience, service, and design and command rate, they're the ones that we've seen over the last few years that really are able to push the rates up and sustain that kind of rate growth, which was necessary because of all the economic costs, whether it's the food and whether it's the rates, whether it's energy, everything that's gone up. You need that rate in order to be able to compensate for the additional cost. And the loyalty that you create when you have a great lifestyle, great experience, people want to come back to it. Whereas limited service and budget is all about efficiency, about scale, about low cost base, very low payroll. When you have you can have a hotel of 100 rooms with 10 employees or 5 employees and run the property very cost efficiently with no real experience, a self-service experience almost, but it does win on convenience and price, budget price. The squeeze in the middle, again, one of the poll questions, undifferentiated mid-market is exposed. You have to typically pick a side. What are you going to do? In our company, we kind of have this, because we're an owner operator, we're able to deliver premium and lifestyle experiences, but at a very cost efficient manner. If I continue on, the new models beyond the room night, membership and brand residence. So the first one, membership and subscription, like Soho House and Ennismore and Hoxton, with day accesses. Obviously, their revenue stream is very different. They're looking at membership fee that really produces the majority of the revenue, whereas the rooms and the F&B sometimes are break even or barely making money, especially the F&B side of it. But that's the experience that they sell in order to get the membership. And that obviously is having an impact. And the branded residence that's become more and more prominent everywhere, whether and it makes the deal possible. In most of the cases, you have to have a component of residence. If you're building a 5-star hotel, if you don't have a component of residence that actually pays for the total project, the numbers don't stack up to make it profitable. So branded residence, as you can see from the numbers, are increasing, and the schemes are increasing over time because that's the one way that you can combat the construction cost and the increase in cost in order to make a project viable. AI and digital, again, this is from Skift. The prize that's out there, if you do it well, you can get an increase of 40% in repeat business through AI personalization. The guests spend more money, and your operating workload or the cost efficiencies could reduce by 30%. The negative on the other, there's a reality gap. We're all talking about it. It's ad nauseum. Everybody's talking about AI in every panel and every conference, everywhere we're going, and justifiably so, because it is the next kind of the next big wave of cost reduction and revenue generation. But the negative is here that only around 3% have reached full-scale AI adoption, where 91% are lagging and are in the process of putting some sort of AI into their systems, whether it's back of house, front of house. And those that will win here in the future, in my opinion, are those that move very quickly and use that data that is coming in, the content that is created, the data that's created, in order to personalize the revenue that should come straight to the bottom line. Experiences in F&B, guest by memories. Again, 71% of Gen Z and 74% millennials say dining now shapes the way they plan a trip. I don't think I ever booked a trip based on the restaurant in the hotel or based on the restaurant proximity, but obviously I'm not Gen Z or Gen or the millennials. Those are my children. But that is the new trend, and therefore we've got to go as a company and produce that, specifically in the lifestyle hotels. It's a defining feature, not an afterthought. In the past, it used to be you've got to have F&B, you've got to have a bed and breakfast, the buffet, in order to deliver. Without that, you can't have the guest. Today, it's got to be a pull, not only for the guest, but also for the people that are from the local community that you can attract into it. Differentiator and a margin lever. It definitely improves. We have a great rooftop in London that we converted 2 suites into a rooftop, and it's creating over £3 million of revenue and $1 million in profit, because the margins are much higher because it's all beverage, or it's the majority of it is beverage. So guests will pay for authentic, local, social experiences. We see that in the lifestyle and in our premium hotels. Sustainability, a license to operate, a little bit like the internet was in the past, where internet, if you needed to have it in order to get the guests. At the beginning, it was a nice to have. At the end, you couldn't operate, you couldn't get a guest if you didn't have internet. I think sustainability is moving in that direction. It's becoming important. It's part of a decision-making process it's not only decision, it's actually if you have 3 or 4 hotels, you're thinking it, and one of them is more sustainable, the other is known for its sustainability, it influences your decision on where to book. And today, because of the cost of solar and the cost of other ways of reducing your cost, you're able to install energy efficiency in your properties and reduce your costs. So it's become where before it was a cost element in order to maintain sustainability, CSR. Now it's become something that reduces and helps you with your margin. And it also is a board level cost of capital. When you think about the CSR directive reporting, the decarbonization target allows you to do green financing with ESG, and it's becoming part of the cap stack that you're able if you move into sustainability. And here again, I'm not doing too much of a commercial, but we have all our hotels in gold, and it is actually built into our operation rather than a bolt-on as an afterthought. We need to do this because the clients demand it. It's part of our operating standards. Brand power. The major groups run dozens of brands and brand distribution, loyalty, and pricing. Again, we've got 6 or 7 or 8 of our brands, all different. I think it gets a little bit complicated when you have 40 or 50 brands. It's a lot easier when you're smaller and you've got 5 or 6 brands to properly differentiate between the brands. I get confused with 40 brands in one company and who they belong to. Is it Marriott or is it Hilton? And I think that while what the difference is with us is whilst we don't always act as an owner in Leonardo, i.e., when we lease a property, we're not the owner, but we are the owner of the economics. We're always the operator and always the brander. And I think that's the asset heavy side where you basically, all of your properties, you act as an owner, even though you're not the owner of the properties, especially in the leased and the few managed that we have. What's important about that model is that when you own the property or you own the economics of the property is that you have the direct relationship with the customer, the loyalty. Remember that when you franchise a property or you have a management contract, you don't own the customer, you don't own the guest, you don't own the data. So that data, as we see with AI, is becoming incredibly important and will be a revenue driver in the future. You don't own the economics, and when you own the asset, you also make the right. I think you make the right decision as an owner of the right ROI projects. Where do you spend the money to get the best return? You're not putting in brand standards in order to support the brand above, and that helps the brand, but not necessarily helps the hotel. And I'm talking here from an experience of 13 years with IHG, 3 years with Hilton. I know that side, and I know the benefits of it, and I respect it. But sometimes the brands that came down or the new brand standards that came down, I would scratch my head and say, why? Why does it help? Where does it help? 2030, our bet isn't a model. Our bet is flexibility, is pragmatic, being pragmatic about it, deciding which model works well, which there are all tools for us of using either ownership, either lease, either management, and obviously we're not yet, our company is not in the franchising yet, but I think that is obviously part of it. My bet would be on the model. No one model will outperform in Western Europe in the next years. It's the flexibility. And I see it as we negotiate new deals. It's us being able to be flexible on lease models, being ownership of 20%, 10%, 50%, 90%, that pragmatic view and being able to be flexible and make the deal with your partner as flexible as possible is what wins us deals more than anything else. They are tools, not strategies, to own, lease, and manage instruments. We tailor each deal to what the developer needs. The cycles move faster and faster. This is a good example in the UK as the cost rose to build, and we saw the new UK leasing stalled on surging building costs and compressed margins. We pivoted to buying, and we started buying a lot more properties in order to help ourselves grow. We didn't wait for a developer that couldn't get the project going. We bought existing projects or existing hotels in order to continue to grow faster. And I think the only thing that would falsify that model of flexibility and moving is if everything stayed constant. Actually, nothing moved. Everything stayed stable, which we know in our world has never been the case. Nothing stays stable. Nothing stays same. It's always moving very quickly as well. What matters to us is and how we look at it in the sense of asset heavy, asset light, and the models is cash on cash through the cycles. What are the returns after we spend capex? What is the NOI that comes from it? And that's the truth metric for us. Is it really smooths out all the volatility. It captures the real capex needs and shows the structure, which one actually gives you lasting. And here I'd say it's not only the profitability that you look at, you actually look at as the profitability increases, when you own an asset, the valuation increases. And you actually, if you capture that, it could be significant. If you're adding £1 million to a property that you bought for 100 million, that property is suddenly worth 110 or 115, depending on the multiple that you give to that extra million. So you've got the profit, but you also have the valuation side of the deal that you look at it, and that obviously helps you when you're looking to refinance. The valuation is higher, and you're able to get a higher amount of debt that if you need it. We kind of look at it and say, don't be fooled by the fee growth. The fees are constantly moving, and all the large companies have done incredibly well over the last few years with a very large development pipeline. But those are fees, and they rely on the percentages of revenue that are up there, predominantly revenue. If you're management, you also look at the profitability of it. But you need to look at it and over a long period of time. If you have a period of reduction of revenues, your fees get reduced as well. And the big signal that we look at as well when I'm purchasing properties, and we've done a lot of that in the last year to 2 years, is the difference in the delta between the encumbered and unencumbered properties. Again, I'm looking at asset light is all branded and unencumbered, whereas when you own it, you can buy unencumbered by branded management. And there's a significant gap, up to 30% gap in value when you look at an encumbered property as opposed to an unencumbered property. In closing, what it means for profitability and valuation, the model won't pick the owner, but adaptability will. Through 2030, structure is a tool. So which structure you use is really a tool in order to get the deal done. And the edge is the freedom to switch between the different models, the different tools that you have, is what's allowed us to grow quite quickly, purchase properties for over 2 billion, and now we've raised another 500-600 million euros to buy the next batch of hotels. Own the guest, the brand, and the data, rather than it being owned by one of the large companies in asset management. As an owner operator, you own that data, which will become the big differentiator in the future when you have that direct relationship with a customer, personalize the F&B, and the loyalty is one. Judge success through the cycles. Don't look at it just for the 2 years, the pre-corona, during corona, after corona. Look at it over a long term. We're a long-term player. We buy and we hold. We don't look at it in 1 year. We bought a hotel in New York now. We're not saying, is it the short-term headwinds is the problem? We're looking at it for the next 20, 30 years. Does it make sense? Is it the strategic right direction for us? And that is it. And I think I managed to stay within the 15 minutes.
You did very well, Ronen. Very well. Thank you. That was absolutely excellent. Really good insight. So thank you very much for your time today. Joe Pettigrew, can I please invite you to come and join us? Joe is the Group Chief Commercial Officer at L&R Hotels. He's going to talk to us about the impact of technology and AI on hotel operating models. Joe, pleasure to meet you, and I wish you well.
Thank you very much. And I will go ahead and share my screen. Can everybody see that?
Yeah, we can. Thanks, Joe.
Okay, wonderful. Well, thank you for that intro. Just a little bit of background on L&R. We are one of the largest private investment firms across 4 major verticals: hotels, commercial real estate, private credit, and ventures. My role is specific to our hotel portfolio with nearly 130 hotels. And we own everything from family lodges to ultra luxury properties and everything in between. And we operate roughly half of those properties ourselves, and the remaining are with, brand HMAs and franchises through third-party management contracts and leases. So we're kind of in a privileged position to see what all the various brands and other operators are doing to adapt to the ever evolving technology landscape. And so I thought it'd be really interesting to share sort of what the big themes are emerging that we can see. Let me start out with something that everyone on this call may already know very well, and certainly what everybody is talking about, which is that trip planning is moving into AI and its adoption is moving really fast. I'm sure a lot of people watching have also used AI to plan their personal holidays, as I have in many occasions. And indeed, all frontier models have now introduced some sort of trip planning capabilities directly into their harness. Google's obviously at the forefront of this, being the most consumer heavy brand out of all of them. And they are embedding end-to-end planning to booking journey directly into its AI mode chat feature. But you're also seeing this type of uh, AI assistant chat capability to get your hotel recommendations from the traditional booking channels like Expedia and Booking.com, and even some of the major hotel brand websites and apps are also starting to offer these types of services. And um, so the AI adoption in planning the trip is growing incredibly fast. And the numbers are sort of backing that trend right now. Already 4 in 10 travelers have used AI to plan a trip. More than 60% of them now use it for most or every trip. And 96% say that they will use it again. So it's the amount of adoption is growing, but it's also becoming quite sticky. And you can also see how the 40% will grow to 80% to 90% in not too distant future, given how, at least it seems to me, the entire world's economy and GDP is basically invested into AI and its related CapEx projects at the moment. And so as more people use AI in their trip planning, we are going to be moving from an era of distribution to recommendation. So what I mean by that is until now, especially in the last 20 years, the best way to maximize the value of any hotel assets was to maximize its distribution, right? To increase the hotel's visibility, the reach. And the name of the game has always been to get on a list, whether that's Google or Booking.com or on Marriott or Hilton or any of these websites. They're all lists, and then you would optimize your listing within that list to improve your ranking and or the click-through rate and the conversion rate. And so the higher you're on that list, the better your hotel performed. And whoever has the expertise to quote unquote hack their way to the top of that list took disproportionate demand available in that marketplace. And as we all know, the vast majority of demand is booked on page one. And so there was an incredible importance that was put on distribution as a result. But as more people start to use AI for their planning, this equation is no longer going to work in the future. And that's because when people are interacting with an AI, they don't just, fill out a form for hotels in London for XYZ dates. They prompt a very detailed requirements like, give me a recommendation for a weekend away in London with my family and a 3-year-old toddler. The AI then qualifies the available hotels with your intent. It will physically filter out all hotels that don't match your criteria and then tries to understand what differentiates the remaining filtered set of hotels to give you just a handful of results. So it looks at things like the size of the room types. It might even look at like the kids' food menu, what others say about the hotel, especially for families. Then it makes no more than 2 or 3 recommendations, typically with the top recommendation and say a couple of alternatives. And this trend will fundamentally shape how we operate hotels. And it is incredibly fundamental. Um, in the old world, I could decide what I wanted guests to know about my hotel. For example, I could just put on some claims that we are the most family-friendly hotel in the world. Come and stay, and book now. Here's a family-friendly discount, kids eat free. Um, but AI won't simply accept a description from me that says we're a family-friendly hotel anymore. It will look for evidence that we are family-friendly hotels, and that uh, will, in other words, look at the evidence. Is it is there a thoughtful children menu? Are the rooms genuinely suitable for families, or do they have facilities and services that support parents traveling with young children? But probably most importantly, let me ignore what the hotel has to say about themselves, but what are other guests saying about their experience? And because AI isn't trying to recommend thousands of hotels, it needs a credible way to distinguish between them, and it will increasingly do that by looking for evidence of actual guest experience and not repeating the hotel's marketing claim. So the key thing to understand here is with AI, the list shrinks from thousands of hotels to perhaps three whenever a guest is looking for a hotel moving forward. And whether your hotel makes that short list will depend on how well it matches the guest specific requests and whether there is enough real world evidence to prove it. And that means the traditional distribution funnel is inverting. I call this the inverse distribution theory. We all know the traditional funnel, the awareness, consideration, booking, and then experience. Historically, hotels have focused most of their energy at the top. Like I said earlier, you build awareness, improve visibility, drive consideration, and convert that demand into bookings. And the guest experience usually kind of came at the last, right? It got compressed into a review score that influenced consideration. But a hotel can often compensate for that weaker score with the right rate, stronger placement, advertisements, sponsored listings, some hackery trickery up our sleeves for more visibility. But AI will change that sequence, and that's because when an AI recommends the hotels, and when it only recommends, say, 3 hotels, all other hotels in that market, hundreds of thousands of hotels that are also in that market, effectively becomes invisible to that guest. And therefore, awareness, as we know it in this traditional demand funnel, slides down the funnel. And the AI does not build that shortlist based on visibility. It starts with the guest specific requirements, looks at the things that really differentiates one hotel from another. And then it factors all of that into determining whether the hotel enters the funnel at all. So awareness is no longer simply something you buy at the beginning of the journey. It becomes an outcome of everything the hotel is, everything it offers, and how consistently it delivers. To put it slightly more over dramatically, the operations is really becoming the new distribution. It sits higher in the funnel above the existing commercial functions. And that is really a major change to our operating model to understand. Because distribution has so far been the fast track to maximizing the performance of our hotels, the technology advancements just followed what was most important. And so then in the last 20 years, the technological advancements has disproportionately focused on automating all of our distribution and transactional challenges. So in the last years, we've automated things like pricing, state controls, inventory channel management, payments, reporting, you name it, all to do with how can I be in front of or get listed on lists? How well am I optimized on that list? And when the guests are booking, how uh, in an automated way can I receive those bookings and so on? It really enabled quick, consistent, wide distribution of our hotels. But in those same 20 years, you would argue that we've hardly accomplished much on elevating the overall guest experience. And that part was always left to humans to work on, the brands to enforce, the SOPs to govern. but the systems themselves, didn't really advance as well as the incredible advancements that we've seen on the distribution side. So, by the way, we've had things like ticket management systems, labor management systems, and et cetera, but they're only as good as humans entering the tickets into those systems in the first place, right? Which the vast majority of the interactions we have with the guests don't end up in. Plus, they're never good at actually coordinating across other systems, shift changes, chasing up for closing of tickets and verifying the completion. And so, they all require human inputs to make all of those things work. I mean, they are more like systems of records than anything that really significantly enhanced the guest experience, which again is going to become a lot more important moving forward, given uh, the, um, the distribution funnel inverting. And so if operations and guest experience now become the new distribution, my guess is that the technological advancements will follow that. And I think it's where we're going to see a lot of innovation happening moving forward. It's already the kinds of innovation that we see today and that we have implemented across our portfolio here at L&R to be at the forefront of this. But AI now allows us to automate parts of hotel operations that have been basically largely neglected for in the past 20 years. It can capture every request instantly, 24/7 in any language across whatever channel the guest prefers. It can respond in the hotel's perfect tone of voice, interpret what the guest needs, and coordinate the actions through the systems and the hotels already use. So it doesn't impact what our staff are currently using today. They are using the same systems that they're already familiar with. The AI just sort of sits on top to coordinate in between all of those systems. It can prompt the team, it follow up with the guest, confirm the request was completed, and record the entire interaction in the correct system. And that last part really matters more than it might sound, because everyone in this call knows just how difficult consistent data entry is. I mean, it's already hard to get people to enter data into a system in the first place, and it's even harder to make sure that it happens correctly on time every time. And so as a result, most of us today are operating with really only a partial view of what's actually happening in our hotels. But AI really changes all of that. And it also has some real consequences for how the hotels are staffed and managed because of it. The first is a dramatic reduction in the volume of inquiries handled manually. So if AI becomes the first point of contact across every digital and voice channel, most of the routine questions will be simply reduced. And depending on what type of hotel you are, I mean, that could be 50% of your call volume and nearly 100% of your email inboxes. And that will compress some coordination roles. Uh, think about folks like the PBX connecting callers to right departments, or housekeeping coordinators that are creating hot sauce job tickets from issues that are being called down over the radio by the housekeepers or the maintenance guy up on the floors. I think some of the management layers will also become leaner because the technology is interacting with the guests almost better than any human ever can. It's perfectly on brand. It follows the SOPs to exactly, and it is probably going to be a lot better at labor allocation. And so that will have some impact in the management oversight to make sure that everybody stays on brand. But there are some other roles that could also expand. When you capture almost every guest interaction, you start seeing revenue opportunities that were previously invisible. So, for example, at one of our hotels, we discovered that a significant number of guests were requesting for luggage storage service, and we didn't even know this. But they were using essentially our hotel as an entry and exit point while they were touring the UK. And so, but now, now that we're looking at every single guest interaction that are being captured and recorded, this was an incredible insight for, how we shape our commercial strategy moving forward for that hotel, and also to generate some additional income opportunities as a result. But these are the sorts of things that the guests were talking and asking us directly, but they were never, mentioned in reviews or anything. So then they become invisible in these systems where we were reviewing in order to properly assess, what the opportunities were. But there's another thing, which is the AI orchestration. As it becomes more widely available, the minimum standard of hotel services will actually rise, right? So stuff like instant WhatsApp responses, 24/7 in any language, like these types of services were once associated with luxury hotels offering dedicated butler service. But I mean, soon almost every hotel will be able to offer this. And so that means the technology itself will stop being the differentiator. I think the advantage will come from what happens after the request is received. How quickly was the service delivered, and was the room properly maintained, and so on. And that could mean that investing more in housekeepers and engineers and other frontline roles could actually to improve response times and consistency of execution might actually increase in the future. And that would be another major change to the operating model, that hotels become hyper-focused on execution and service delivery, with much less or fewer resources tied up in coordination and labor allocation and enforcing standards and SOPs, and just really more focused on the work that guests can actually feel, which will create the evidence that the AI needs in order to be able to make that recommendation, going all the way back to the beginning of our slide. Now, this should also, in theory, result in some meaningful margin expansion, and that should be a good news for hotel owners facing cost inflations from every direction, and that would be a very welcome shift. But in closing, there are some be interesting to just think about some potentially interesting questions and thoughts. So for example, look at what operators and brands are actually selling. A large of it is coordination, standards, enforcements, quality assurance, and reporting. When software absorbs all of that coordination and makes delivery auditable, do we start having conversations about fees, whether that's from brands or management companies? Owners get to really ask what the base fee buys anymore when the hotels are in there executing and all the coordination is all absorbed away by the technology. Yeah, with that, thank you very much. Sorry, I went over a little bit, but appreciate it. Thank you.
Joe, don't worry, that was absolutely excellent, fascinating. So my thanks to you. Can I now invite Russell Kett, Chair of HVS, to come and join us?
You can, of course. And thank you, Joe. Thank you, Ronen. For our panel session this morning, we're going to be focusing on the changing nature of operating models across the international hotel market, especially by 2030. And can I encourage my panelists, please, to turn on their cameras, switch on their microphones, plug themselves into the mains or whatever they have to do. And so, as you see, joining us are 5 distinguished experts who are going to endeavor to build on the views already shared by our 2 presenters. We've got, as you can see, Bettina Graef-Parker, who's the managing director at Aareal Bank, Guy Pasley-Tyler, the co-CEO of Archer Hotel Capital, Matthew Vance, who's a senior associate at Bird Bird, Guido Fredrich, Vice President of Development, Luxury and Lifestyle at Hyatt Hotels, and welcome to your new job, Guido.
Thank you.
And Ashley Krais, the Chief Financial Officer in Europe for Westmont Hospitality. Now, I've developed a number of questions that they're going to have to answer. I won't tell you if I've used AI in developing those questions, but I'm particularly keen that they should have an opportunity to answer your questions. And by you, I mean the delegates to our session today. So if you've got questions, put them in the Q&A function. We'll endeavor to cover as many of them in our session. And if time doesn't allow, we'll get back to you afterwards. And just a word of encouragement, we can't get back to you if you describe yourself as anonymous. So please don't shy away from revealing who you are. So, ladies and gentlemen, let's kick off. Keep your answers brief. We're a little bit short of the time than we had hoped for, but keep brief answers and we'll cover as much ground as we can. So very quickly, and I want one example, how, in your opinion, are hotel operating models likely to change over the next 5 to 10 years, and what will most drive those changes? I'm going to give priority to the only lady in the group. Shame on us for only having one, but there you go. Bettina, what's your thought?
Well, thank you for letting me go first, because I assume that at the end of the line, it will be harder to answer this question. I think, obviously, I'm answering this from a perspective of a banker. So for us, what we have been seeing is increased transparency, and that's something that we also need, and particularly increased flexibility in terms of adapting to different cycles, different innovations. I mean, the AI presentation was just very interesting. So I think flexibility of the operating model will be key.
Okay. How about you, Guy?
I think Ronen touched on the extreme sort of polarization between the luxury and budget ends of the market. They're only going to be very remotely in the same business in the coming years, because luxury feels like it's becoming a bit of an arms race. It's got some great sort of macroeconomic tailwinds, I think. And budget seems like it's a bit of a race to the bottom to work out how many services we can strip out, and whether that's windows. I don't know if beds are next.
Okay, Matthew.
In line with the trend of flexibility, I think there'll be increasing pressure to franchise at the luxury scale of brands as owners and investors become more sophisticated and want to control their assets. There's more pressure on brands to give up the reins of control over those prized brands.
Okay, Guido.
I think my keyword would be alignment between the contracting parties, and with that, we'll probably see big differences between contracts on the budget and select service end and contracts on the luxury and lifestyle end. I think we're firmly moving away from the one-fits-all approach, and a standard management agreement or franchise agreement looks like this, and much more to a tailored approach that is the result of a negotiation and genuine partnership.
Okay, Ashley, I'm very sorry, but as Bettina went first, someone has to go last. And so you have to choose something that nobody else has chosen already.
Well, I'm going to go back to the distribution model that was talked about earlier then. And I think that what we're going to find over the next 5 years, 4 years, is that increasingly my AI is going to be talking to your AI, and the human is going to be cut out of the process increasingly. So how that changes the whole buy decision model that was talked about before, how that changes the likes of the distribution brand versus Booking.com, I think that is going to change massively over the next 10 years. I'd say. I think everything takes a bit longer than originally thought, but it will definitely blow the whole thing wide open.
So it's interesting. Your AI is going to talk to my AI. Are they actually then going to go out and do lunch together?
Well, I think that someone said that F&B is increasingly important, but maybe not in an AI world.
It's the experience that counts. So, guys, which hotel operating model? Is it going to be traditional management, franchise, lease, hybrid, owner-operated? Which one is going to create the most profitability and therefore the most value in the future? Guido, why don't you kick us off?
Sure. I'm going to try not to say the same thing again, but it sort of goes into a similar direction to my previous answer. I think there'll be big differences between the various types of hotels and the various partnerships that we're seeing, and I'm not sure that there is going to be a one-fits-all answer. On the luxury and luxury lifestyle side, so my focus area, I think certainly for the foreseeable future, management contracts and hybrids, albeit in a much more tailored and case-by-case negotiated kind of way, will be the answer to that question. On the more volume side of the business, select service, mid-market, upscale brands, I think we'll see much more activity in the franchise space.
Ashley, what about you? Anything different?
Yeah, I'll come back to that word flexibility. I think that what AI will also enable is to have the right hotel in the right location being built in the right way more easily than it is today. And that choice then of the right hotel will also help with the choice of brand. And I think that scale is going to be important to a certain extent. I think somewhere in the middle, either a big company which has the ability to be flexible within its systems, and we've seen, by the way, the big brands in technology get stuck in legacy systems, which makes it very difficult to turn that oil tanker around. And so does that mean that the newer players who are able to invest in an AI world from the get-go are going to be better? But an individual hotel or one hotel, are they going to be able to keep track of all the AI developments that are going to come in sufficient time? Sure, there's the democracy of AI, which should help them in the long term when things are settled down. But in the next 10 years, are they going to be able to keep up? So I think somewhere in the middle, it might be the place to be.
From a banker's perspective, Bettina, what's your thought on this?
I think it again comes back also to the flexibility point and also the involvement of the owner. I think ultimately, as much as the owner can get involved, who is interested most in profitability in a management agreement because it causes their returns, I think that's where we're going to see larger profitability than we have historically seen in, very stiff fixed lease models. Because, when we say flexibility to adapt to new situation, that also means flexibility to adapt to new revenue potentials. And that will only happen when owner and operator interests are strongly aligned, which in the old traditional fixed lease models, traditional management agreements, that's not the case necessarily.
Interesting. Matthew, I think I know what you're going to answer, but give us a short one anyway.
Well, I think there's been a proliferation of franchising in Europe, and that's not a new trend, but I think that trend will continue for the next few years, especially in parts of Western Europe, and driven in part by the increasing availability of third-party white label management companies.
I can't expect Matthew to be able to answer on profitability and value, Guy, but I'm sure you can. How do you approach this from that perspective?
Look, it's horses for courses, I think. It's not one size fits all. We have a strong bias towards owner-operated / franchise. And I think the key word for me there is control, because you have control over your business. But it's very fashionable to ding the brands as well and say that they, don't know what they're doing operating. I actually think there are a couple of hotels in our portfolio which are brand managed, where they do an absolutely exceptional job, and I think they're the best operator in that instance. So I think it's very much opportunity specific.
Okay. I've noticed a question from one of our esteemed audience. I'm not sure you're going to be able to answer it, but James Howell has said, why have hotel guests, especially leisure guests, become so prepared to sideline their own judgment and allow AI in the end, an intelligence constructed by others and largely ignorant of the individual's idiosyncrasies? Gosh, I couldn't almost not say that. To limit their choice to 2 or 3 options at most. What happened to curiosity, enjoyment of investigation and planning, the thrill of an unexpected discovery, and a sense of personal achievement? Well, James, thank you for the question. I'm not sure that any of my panelists is going to take a jump at answering or giving a view on that, but if you raise your hand, I'll choose you.
Well, I'll dive in there, Russell. I think it may be a time-saving tool, which is not how many of us could use AI. And we're flooded by choice as a consumer, and there's so much information out there, and consumers are so information hungry when making decisions. So you've got all your big list of hotels to look at. You'd want to look at the reviews. You'd want to look at the surrounding areas, things to do. And AI is just an efficient tool of filtering through all of that and giving you what you think is the answer.
Go on, Ashley.
Yeah, I think that in part, it's also saying that, to the point about the fact that the AI doesn't know you, the whole point, if you use an AI with the memory on, if you're prepared to do that, then the AI will learn your, what was the word, idiosyncrasies, Russell, and your proclivities and your likes and your dislikes. And they will start putting in front of you hotels. And then you'll say, well, I don't like that one because, and then it will learn and it won't give you the same thing again. I mean, there are examples. I think there's an Asian CEO who has actually handed his entire life over to his AI assistant. And as a result of that, he reckons he's happier than he's ever been. I think his name was Bill Nguyen, and I think it's a Vanity Fair article. So have a look at that. And that's one example of where I think we'll be in a few years' time. And it will learn what we like, and it will give us what we like quicker.
Okay, we're fast getting into a sort of an AI-dominated discussion, which I don't particularly want to engage in, but I would like to just come back to the people side. We all know that hotel operation is a people business, but are hotels going to be able to afford to have people in the future? What do you think, Guy?
Yes. Is the optimistic view. I think the long-term kind of tailwinds we have in our industry are really interesting. When you talk to graduates now and how hard it is to get jobs in a lot of professional services industries, I think the appeal of hospitality and businesses that rely on people-to-people interaction is going to grow.
Guido, any thoughts on that from your perspective?
Yeah, I would broadly agree. I mean, I think the people side of the business and the service delivery in hospitality, there's a clue in the name, right? I mean, will need to be delivered by people, and I think if anything, that'll strengthen. To my mind, technology and AI should be there to facilitate all sorts of elements of the guest journey. I mean, it starts with research and booking, goes on via all sorts of other things that can be made easier on apps and sites. But the on-property service delivery and the creation of the fundamentals of the guest experience will need to be delivered by people.
Yeah, I get all of that. However, we can probably afford them, but what are we going to be doing to make hotels an attractive destination for the young people of tomorrow? Will people still want to work there? What are we doing to make hotels a more attractive proposition? And perhaps it means that we have to get in at the primary school level to build our PR and so forth. What do you think, Ashley?
Well, I think it's going to come back. Sorry to go back to AI, but if AI is going to be taking away a lot of the mundanity of jobs, then it becomes about the mine host element and the service element. And for sure, there are people in this world who are well suited to that. and who would thrive in that kind of environment where their job is to, if you like, make other people have a great time. So I think that finding the right people for that is where we should be focusing going forward. I think that AI will take some jobs away, but going back to the point we were making earlier, my AI, your AI, I think people will be crying out for human-to-human interaction. And we're better than to find that in a hotel on both sides of the equation, both as the customer and as, or the guest rather, and the staff member.
Bettina, you were nodding your head, I would say almost even vigorously.
Yeah, I agree, because I mean, just before we mentioned that so many people are actually, or the younger ones are feeling more lonely than the older ones. And, with AI, this is just going to continue. So interactions are going to be limited. And this is what we offer, a platform for interactions for the customers as well as for the employees. And we're still somewhere where people are looking for experiences, and this is what we can deliver. Particularly in the lifestyle and in the luxury segment. And I think this is going to become more and more important to employees as well, as the more repetitive tasks are going to be taken over by AI. It's going to be the more interesting tasks. We don't even have to start with AI. We can start with robots cleaning the lobby. That's not going to be the hospitality job anymore. The hospitality job is going to be more about the interaction and more about the delivery of in contact with the client service. And this is something that, the younger ones of the future may actually be looking for, or at least I hope, when I'm thinking of my children.
Lovely. I'm going to move on, and don't worry, Matthew, I haven't ignored you. I'm going to come to you first on this next question. We've had two questions from our distinguished audience members, sadly not brave enough to identify themselves, but one is asking, how is the trend on manchise, i.e. management and franchise? And the other is saying, are manchise agreements the future of luxury hospitality? And what is the future of hotel management agreements in the luxury space? So Matthew, why don't you kick us off? And if any of the others want to then continue, that's fine.
Sure. Well, I guess it depends what we mean by manchise, and what it means to me is where you have a franchise and then a management agreement underneath. Some people may think it's a combination of a franchise and a management agreement, but
I think most people would tend to think it's a contract that starts out as a management contract and then has the opportunity to convert to a pure franchise agreement after a period of time, maybe 5 years, maybe 3 years.
Yeah, I mean, in line with my first comment, I think there's increasing, and in line with the trend of flexibility, there's increasing demand on owners to be able to franchise. And whether it's in a contract or not, there's increasing franchise flips from managed to franchise, and demands on brands to do that. I think there will be a loosening up in the luxury sector of the brands that are available for franchising. And once that starts to happen, it's logical from there that you'd get more manchise contracts. I've seen it discussed in some contracts that, owners may want a clause that says, if this brand becomes available for franchising in the future, then you will give us the opportunity to do so.
Fair enough. Guido, I know you've not been with Hyatt more than 3.5 seconds, but can you provide us with some indication of to what extent manchise is a route that you're increasingly looking at?
Sure. Yeah. Across the business, as I said earlier, I think franchising is becoming more and more important, particularly on the mid-scale and upscale side of the spectrum. I think manchises are a useful vehicle in certain situations and with certain partners to kick the relationship off in a certain way and to then transition to franchise when certain conditions are met. It could be, as Matthew has said, like if the brand becomes available for franchise, we will consider, or may consider it after 5 or 10 years, subject to the then operator or prospective operator fulfilling certain criteria. All great and wonderful things to consider, I think, on a case-by-case basis, but very, very opportunity specific. And the one nuance I would add, I think it also depends on where we draw the line or how we define luxury, right? Because there is a, do I necessarily see that happening at the very, very high end of the business? Don't want to speak for anyone else, but at the Four Seasons Rosewood Edgar level, not necessarily, if I'm honest. But they're better placed to answer those questions than I am. On the higher volume side of the business with the larger brands, I think much more likely, yes.
So Guy and Ashley, have you got anything to add to what's already been said, or are you in violent agreement with everybody?
Well, first of all, I'd like to agree with Guy that we've also got some managed properties which have worked really well as managed properties. So it's not a one size fits all. By managed, I mean brand managed, as opposed to operator franchise. I think franchise is a great way to go on, say, a 5-year or 10-year look, where if you're going into a new market, or if an owner is trying something for the first time, to get the brand to manage in that opening period when the brand knows everything there is to know about their own brand, how to get the best out of it, especially from a sales marketing perspective. And then to have that opportunity to take that learning further down the track and say, right now, can we make this more efficient through the franchise model? I think that's a potentially great model.
Anything to add, Guy, or shall I move on?
Well, mainly to thank you, because I was never quite sure what a franchise meant. I've heard it used in so many different contexts, but you've now definitively defined it for us. I think there's an inevitable move towards franchise in luxury, maybe with 1 or 2 protected brands, because the brands are so obsessed with scale, and their business is all about scale. They're judged on net unit growth and the growth of their loyalty program. That's what Wall Street cares about. And I think in order to achieve continued growth, they're going to need to accommodate more franchising.
Okay. Our audience has been particularly active. So I'm going to go to 2 more questions there. The first one is a yes or no answer by one of you. Is AI becoming more sophisticated, or as AI becomes more sophisticated, will there be a resultant reduction in independent asset management companies? In case this person is a member of such an organization and fears for his job, I won't actually identify him. But Ashley, what do you think?
No, I'm not worried about my job, Russell. I think that management companies like ours have demonstrated through the great financial crisis, through COVID, through the growth of the teens, through the choppy waters of whatever this decade is called, the 20s, the not quite so roaring 20s, that we can change with the times, and we're just going to have to do that. I think there is still a place for management companies. There will be for owners.
I'm talking about I think he is talking about asset management companies, people like me who go and stand between an owner and an operator.
Okay.
He's asking me if I'm going to be out of a job.
Well, I don't think so, Russell. I can't see that happening in any time soon. I think that what happens is that companies adapt to the circumstances in which they find themselves. Are lawyers going to be out of a job or are law companies going to be out of a job because AI is just going to interpret the law? I don't think so. I think they'll just find a way of using AI to bolster further their own presence. So no, I don't think so.
I'm going to move on unless anybody's got a burning desire to jump in on this. So Deborah Wavra She's seeing a massive new source of wealth emerging from the tech sector, creating a younger generation of high net worth, high earning, wealthy travelers. Do you, panel, believe the hospitality industry needs to account for this tech wealth as a distinct demographic segment? How will their specific preferences dictate the future of luxury hospitality and brand development? Guy.
Thanks for that.
I could have said Bettina and really thrown her a low ball, but
my answer is going to be incredibly unsophisticated. I think they're just another group of very wealthy travelers, which feeds into the kind of wider macro trend of massive exponential growth in high net worth individuals. And you can see that's what the luxury market is catering to. I think as for catering to them as a specific sub-market, not really sure.
Anybody else got something to add on that? Guido? I would suddenly produce another demographic.
I would broadly agree. I mean, and I think it's actually fairly in tune with what we have seen across the luxury business. The customers getting younger, their preferences are changing. Brands have got to be ecosystems that constantly change and evolve and keep up with their customer base. So it's just another one of those elements that keeps the creators and custodians of these brands on their toes, or is at least meant to keep them on their toes. I wouldn't think that the tech segment is something we would have to gear to specifically. It's one customer group that needs to be cared and catered for, just like the various other ones that that we have. But obviously, that trend which is there needs to be taken into account when conceptualizing these hotels and marketing them.
Okay, I'm going to move on because I'm very interested in trying to pronounce the name of Alina Kazashevich. Kazashevici. Forgive me, Alina. Matthew, she wants to know, can we expect to see more hybrid leases in the European space? I'm assuming you know what a hybrid lease is. Please take it away.
I'll defer to you again, Russell, to give the definitive definition of a hybrid lease before I answer.
That's very kind. I have absolutely no idea, except that she might be saying it's a hybrid lease that has management-related terminology in order to focus on more operating performance-related remuneration.
I think it's possible. It would depend on the market and the individual situation. I think in many parts of Europe, there's still landlords that wouldn't be interested in that in that model. For newer brands into the market in Europe, I think they are looking at leases more, or less established brands, or maybe brands that like the lease model. They'd certainly be pushing for hybrid leases. Although I think the preference for the many other global operators is still for managed and franchise, obviously, in Europe.
So just quickly, Bettina, are you seeing this sort of hybrid lease creeping into the agreements that you're lending on?
Not so much, in all honesty. We've always positioned ourselves as more of a management agreement franchise lender than a lease lender. The leases that we do finance do have components of flexibility, so variable rents in it that are performance-based.
Yeah, that's exactly. Ronen has just sent me a message to say that we say hybrid is an element of fixed and variable, i.e. a minimum lease, but has an upside if the revenue hits certain hurdles. So thank you for that, Ronen. Much appreciated. I would like to try and anticipate a few more areas of questioning if we can, because I'm conscious of the fact that time is burning very, very fast. F&B came up in the poll. It came up in the presentations. And I just want to make sure that you guys all agree that F&B is an important aspect of the hospitality industry going forward. But what do you see emerging in terms of new guest experiences within F&B to be able to make the space a lot more exciting? Guy, do you want to kick us off on that?
Sure. Yeah, I mean, I was going to say, I think the F&B at the luxury end is always going to have it's just a huge part of the overall experience. I think there may have to be an acceptance with the headwinds we have, specifically in F&B, that not every outlet can be a hero. In terms of trends in F&B, I think, I mean, it's always going to be the fastest moving area of our industry, maybe apart from distribution. So restaurants come in and out of fashion really quite frequently. I think there's going to be a focus inevitably on concepts that maybe have lower levels of human intervention as people try to hang on to their profitability. And I think allied to that, there'll be quite a big focus on health food trends. So at the moment, when you talk to people about restaurant concepts, protein comes up. The younger audience is very much focused on that kind of aspect of health. So I think, one of the concepts that was stuck in front of us recently was a proposal for a kind of, if I can call it, an upscale kebab restaurant, where it feeds into those trends. It's relatively low cost to deliver. It's low staff intensity. It's quite simple, but it also feeds into the kind of the whole protein health drive.
Guido, what's happening in the world of F&B in Hyatt? I have to confess that when I first entered this business, Hyatt was always at the gold standard of F&B, and I can't say my view has modified that much. But are you still at the gold? No, this is not an advertising opportunity. But how Hyatt, in your view, addressing the need to keep F&B front and center in terms of guest experiences?
First of all, thank you for saying that. I think I hope that you're right, and I would agree that F&B, especially on the luxury and lifestyle side, on those two in particular, actually is an integral part of the guest experience, and for lack of a better expression, of the positioning for the hotel as a whole, right? I think F&B has an ability to do a lot of work that activates these spaces, that gets the locals into the hotels, and that positions them, and hence brings a value to the property that is not necessarily even visible in the P&L, because it helps the rooms business by activating those spaces. The answers in terms of to what's being done and how exactly that can be achieved is going to have to depend heavily on the brand and the segment that we're talking about. My answer for a Park Hyatt would differ wildly to a standard answer, to an answer for the standard brand. So to go into more detail would probably go beyond anything that we've got time for here. But it is a hugely important part of the premium side of the business. I don't see that changing, both for guests, for owners, for brands. It's big.
Okay. Unless anybody's got something material to add to what's already been said, I have one more question before I go to my final question. So brief answer, please. One of our audience, James Howell again, he says, how, if at all, are operating models changing to take account of a more volatile and rapidly changing climate, both in the more leisure-dominated and therefore climate-dependent locations and business destinations where reliability is key? Gosh, hell of a question for Ashley to answer, but he's going to give it his best chance.
Look, we always have to be flexible. I mean, location by location. I think the question is maybe to do with is climate. Let me rephrase it, and if I'm wrong, then perhaps the person listening can correct me. But I think it's that with what's going on in the world, with climate change leading to say, flooding in Valencia that we saw a couple of years ago, or wildfires, so I'm not picking on Spain, but wildfires in southern Spain right now. What does that mean for hotels, and how do we make sure that they're able to deal with those things? So I think obviously ESG is a different matter, and that will continue evolving. But I think that as far as we're concerned, the safety and security of our customers is paramount. That's the first thing that we're concerned about. And in terms of stability for our business customers, that is something that each hotel looks at to see what its USP is in that regard. I think it's a difficult question to answer, actually.
Okay, I'm not going to come to anybody else. I have to move to our final question because we need to respect the time of our delegates and bring this to a close. And I still want to be able to hand over to Simon to finish off our session today. So, ladies and gentlemen, a quick one-word or one-clause answer. Looking ahead to 2030, what will be the single defining characteristic of the most successful hotel operating model? That's all I want you to answer. The single most successful hotel operating model, what will be the defining characteristic? And because I always respect people who are HVS alumni before anybody else, Bettina, you can have first shot.
Adaptability. It's another word for what I said in the beginning, but I believe that that's the most important.
Okay. Matthew?
Return.
Guy?
Agility, because adaptability has already been used.
Ashley?
Experience.
And Guido?
I'll stick with alignment.
Okay. Ladies and gentlemen, thank you so much for your contributions this morning. May I thank our audience also for bringing to us some interesting questions to answer. And with great pleasure, having thanked you, may I invite Simon Price of Bird and Bird to bring our session to a close. Thank you so much.
Thanks very much, Russell. That was a fascinating discussion. I suppose for any business in the next few years, we're going to see a huge changes due to increased AI and technology. And whether your business is professional services or operation and ownership of hotels, the next few years presents a threat if you fail to adapt to change, but also an opportunity if you can focus on how the business can best adapt. So big thank you to our speakers, Ronen and Joe, and our very experienced panelists for the insights they brought into how operating models will change over the next few years. The key takeaways for me were how operating models need to remain flexible. It's likely that we'll see some more franchising, potentially even in the luxury space, but most of the panelists and speakers still recognize the importance of flexibility and adaptability in operating models. We heard a lot about the importance of distribution, particularly with increased AI involvement in the selection process for guests. I like Joe's line that operations will become the new distributions. We learned about the importance of new guest experiences in F&B, health and well-being. We learned about the increased polarization between the premium and budget hotel segments, potentially leading to a squeezed middle market that kind of have to decide which way they go in terms of super efficiency or increased opportunity and experience for guests. But with all this talk of AI and technology, it was really good to hear about the importance of people in enhancing guest experience and customer service. Whilst technology might take over some of the more back of house mundane roles, it was really good to hear that there's a real importance in having people that can interact with guests. And I think most importantly, we heard that there remains a role for asset managers and lawyers, so we can all sleep in our beds well tonight. A big thank you to Izzy McHattie from Leader's Journey. She does all the hard work behind the scenes, both today and in the preparation for these webinars. So thank you to her. And thank you for attending and participating in the questions. We run these webinars every sort of 3 or 4 months. We'll definitely be organising another one for early autumn. And so we look forward to having you all there. Thanks very much.